Saturday. Today I'm going to be talking about TTOs, or triangle they out, in terms of the Strat for those who are familiar. Essentially what they are, how to spot them, what they're used for, and just to make a little more clearer on exactly when to enter and things like that. I'll be using TradingView today just to make it a little clearer than Thinkorswim. So to get started, what is a TTO? A TTO is essentially just a pullback or a retracement in the direction of the trend, so you can get in on the trend at a better moment than, let's say, potentially FOMOing into a long trade or a short trade and getting stopped out. So when we're looking for a TTO, for bullish ones, I like to think of, just as the name suggests, triangle they out. We're looking for a triangle. Now, of course, they're not always going to be this shape, but we can look at the different steps. So looking at this Microsoft chart on the 5-minute, and personally, I prefer looking for TTOs in the 5 or 15-minute when I'm day trading. But of course, any time frame is valid. It's just whatever you prefer. But for me personally, the 5 and the 15-minute, I prefer, and I'll show different examples. So with Microsoft here, as we see, we had a gap up. And generally, what I prefer to look for is for the 4-hour and the daily to be in my direction before I take a TTO on the 5 or 15-minute, because I want to get back into bullish continuity or bearish continuity and continue with the trend. So of course, the first thing we're going to be looking for on a TTO is going to be, of course, we get the move up, the initial push up, and then we're going to get a retracement, which we get right here, as you can see. And then it continues in the direction of the trend, which in this case was bullish. So for me, the way I like to see it, it's good to draw them on your chart, and then you can just think of like a triangle that formed right here, and then it heads higher. And that'll be our bullish TTO. Now, you may be thinking, all right, where can I enter? Where can I place my stop loss so I can get into the TTO? So actually, yeah, I'll go over the entries and then I'll go over a little more context and philosophy behind the TTO. So when you're getting into your entries, if you're familiar with the Strat, all we're going to be looking for is a reversal back into continuity, back into the trend that we want to take. So in this case, we have a bullish movement, the 4-hour and the daily more than likely triggered because we gapped up, and we're getting a pullback, and we're going to take a bullish reversal back into continuity or back into the trend, which in this specific case right here, we would enter in on this reversal to the upside. So this is the setup candle, this red candle here, and price reversed to the upside. It triggered a bullish reversal. This will be a long entry. And then your stop loss, this really depends on the individual and your risk tolerance. For me, I like to have my stop loss under the triangle per se. So in this case here, I'll put my stop under the trigger candle, or rather the setup candle. And of course, you can have your stop loss here, you can have it down there, you can have it even low of day. But for me, this works best for me right here. And then of course, with the Strat, as we know, our targets could be the previous candle high. So that could be target 1, target 2, 3, etc. Some people just like to have their first target at the completion of the TTO, which will be right here. So their first target would be the high of the triangle per se. So this will be your entry. You can use the previous candle highs as targets, whichever one you want, or just the high of the triangle, whichever you prefer. So as you can see here, once price reversed, pretty much broke through in the second candle, completing the TTO target, and then just continuing higher. So using this TTO method when it's a trend day or when we want to hop in the trend, it'll limit you getting in a bad fill or a bad section or price point where you can maximize your risk to reward. Because let's say, for the sake of the conversation, and let's get rid of all of these. Let's say we get the gap up and you're feeling FOMO, and then you get in, let's say, on this 2-2 continuation. So you're getting in on this third candle once it triggers up. As soon as that happens, you get a decent move up, and then it reverses on you, which we want to avoid. Because remember, market makers, algorithms, hedge funds, whatever you want to call it, are here to take money from retail traders, which is, everyday people, right? So with that concept being spoken, we can see it right here. Whoever went long here, let's say on this candle right there, they got stopped out if they had their stop under the candle. So this candle here stopped them out. And I'm pretty sure, depending on your strategy, if you get wicked out here, that can probably stop out whoever went long in this area. So instead of getting stopped out, all we need to do is wait for the opportunity to present itself, which, as we can see here, came back down and then took us higher. So another example, since this is being one of many different TTO versions, here's a SPY chart on the 5-minute. Same thing. We get the move up, we get the retracement back down, and then we continue higher into the trend of being bullish. So for this trade here, similar to before, we're going to look for that reversal back to the upside. Also, if a hammer prints on the bottom right side of the triangle per se, to me, those have been the highest probability versions. So right here, we will get our entry above. I will place my stop loss down here under the TTO. And then, of course, previous candle highs or the high of the TTO as your target. And then price just kept on going up literally all day from your entry. Never stopped you out. So, of course, this could be one target. You can have other targets depending, what those may be. Daily highs, 4-hour highs, fibs, ATR, whatever it may be. So this is the bullish versions. Now, when it comes to bearish versions, it's pretty much in reverse. For bearish ones, I like to, instead of looking at it as like a triangle or I guess upside down triangle, you can look at it as an H pattern. And shout out to Trust My Levels for putting me onto that. It was a lot easier for me to comprehend looking at it as an H. So in this case, for this bearish TTO or an H pattern trade, clearly we gap down, so we're bearish. The daily 4 hours bearish. Now all we need to do is look for a pullback in the direction, a pullback to get in on the direction of the trend that we want to get in on. So in this example here, we have the pullback up. We get a double inside bar. Entry is going to be right here. This candle will trigger us in. Stop loss, again, depends what you're comfortable with. Could be up here, could be up here, up there, whatever you feel comfortable with your risk tolerance. And then, of course, for our targets, it could be the completion of the H pattern once it breaks that low. And of course, our short entry once we got the reversal to the downside, and then our stop loss. And then, as we can see here, H completed, you got your move. It retraced back up, but of course kept on dying down. Personally, for me, once it completed H, and I probably took some off down here, if there was a target that I had, I would have been stopped out on this little retracement here, because it came back to my entry. And you never let a winning position go red. I'll see if I could find another H pattern to show you guys. Actually, I always forget how to invert the chart. Haven't used TradingView in a while. This is Microsoft on the 14th. Let's go and bring up Thinkorswim. Oh, of course they're doing maintenance. All right, let's look for a bearish TTO, which I think I had on NVIDIA on the 5-minute. So let's say here as an example, not the cleanest version, but we can still use this. So we get the gap down, retrace a little bit, keeps on dying down. You could have entered here if you wanted. And then that completed that little H pattern. And then if you missed that initial drop, we have another bigger one here. We get the move down, retracement, and then it dies down. In this case here, you could have either entered in on this 212 down right there. And then of course, if your stop loss was here, this candle would have stopped you out if you use a stop loss that I do. However, it presented another opportunity to get in once it printed the shooter, a reverse hammer. You could have entered back in here and then just kept your stop loss above that candle, and then it dies down and completes that H. Hopefully that made sense. And of course, any questions, feel free to put it in the comments. One last thing I want to show you guys, actually. Let's see if Bitcoin had one. Let's see. Bitcoin, you can see one here as well. We had this big move down, retraced back up. You get in on that reversal to the downside, it completes the H right there. Even right here, comes down, comes up, reverse hammer, get in on that reversal, completed H right there. And even here, down, reversal, completes the H. Hope this helped clear up TTOs and how to spot them, how to trade them. Any questions, again, put in the comments below, and I will see you guys later. Enjoy your weekend.